Forex market, ladies and gentlemen, welcome back. Wednesday morning today, revisiting the Swiss Japanese yen. We're holding a bearish position here. We're still here, by the way, if you had any doubt. You know, it's been a roller coaster, to say the least. And to be honest, we almost gave up on this one. You know, let me just dial back a little bit. We started when price broke 116.17. Right, that was back then, and we had quite a successful bearish campaign, even though it was expected to go far beyond 113.63. But we saw that we saw the reversal taking place, and we got out. Later on, we came back in when price hit that 116.17 again, and then dropped below 115.26. We pulled the trigger, and you can actually see the trade we have here, right? Then what happened was price, instead of pushing downwards as we expected, it started to turn around again and started to hammer. At some point right here, you know, 116.17 was our mental stop loss level. So for us, it was clear if price was going to break through and push beyond 116.17, it's going to be enough for us to, you know, to close this position out and look for opportunity somewhere else. But I want to show you how that ended up with regarding that 116.17. This is the move. You see that slicing movement here, with that price just spiking that level and bouncing off. That was the reason we decided to keep the position alive and to carry on with our bearish campaign here. Now, lo and behold, price came back, right? So as you can see, for the last few days, probably a week, price got off that, you know, that high horse where it was seemingly crossing above 116.17 was a bullish trap. That's what we know that now, and we're pretty much back in business, right? Take a look, price is coming back down again. So that's just one aspect of the story. I want to show you another aspect that actually kind of enhances our bearish conviction. I want to show you, I already showed you how, you know, the weekly chart was looking like regarding that 116.17 and that spike in movement we had here last week. But I want to show you how the monthly bar is, it looks like, with the same key level system, right? With the same levels here, 115.26. That's the level you want to keep your eyes on. All right, so here we go. Take a look. Now this is a big deal. All right, this is nothing to take lightly. Because if we analyze the situation here from up close, price was already successful breaking below 115.26 last month, right, on September, on the close of the month. Then this month was all about upside push, right? It started to push forward right from the get-go. But at some point, just recently, right, we saw, just a few days ago, it started to pull back down. Now, mind you, we're getting to the end of the month, right? This is the 28th today, so we're only having like 2 days, 3 days to go to the end of the month. And we all can already see the conspiracy of the Swiss Japanese yen pulling back down, leaving a huge spike over 115.26 and 116.17, suggesting that there was a genuine attempt to cross back above these two resistance levels, but it ended up as a huge failure, right? Now that would mean that price is supposed at this point is much more likely to turn back down, right? To be thrown off these area, right? These key levels, turn back down, turn negative, and start to make its way towards that 113.63 again for the second time. This time we suspect, you know, price is going to be successful breaking through, and therefore we're going to be back to the original game plan, which is, you know, chasing 109.51 according to the big picture key level system what we have here. You know, we can run this back, you know, we can analyze this back all the way to the beginning of 2017. That's how old this trading range is. The price just came off 117.32, which is a huge resistance level that proved itself time and time before. So now we just want to make sure price hits that 113.63, breaks that level, and then we can get much more aggressive on the way down, chasing 109.51. That's our, that was our original game plan, right? So yeah, exciting times right now for our position here with the Swiss Japanese yen. It literally is coming back from the dead, and we're still here, alive and kicking. Guys, we'll be back to follow up on the situation here. I can say that we're gonna adjust the stop loss level immediately to 116.50, still keeping a healthy distance, but as price continues to push away from 115.26, we'll continue to adjust the stop loss level accordingly. That's about that. Swiss Japanese yen. We'll be back with the next video. Stay tuned.